Well, good morning, and today is Thursday, May 16th, 2024, and I am Kenny Polcari, your host of the party, and here are the things you need to know about what's happening today in the markets. Well, the Momo guys are at it again. Remember, the Momo guys are the momentum guys, right? CPI came in yesterday, came in line. Retail sales, though, were a bit weaker, and stocks pierced 5,300, taking us into a new century mark. The VIX plunged, suggesting what? That there's absolutely nothing to worry about. There's no fear at all. Just jump in, get your feet wet. Now, are we getting used to 3.6% inflation rate? I mean, it appears as if we are. The market's just not even reacting. Swaps traders are once again demanding that they get a September rate cut or they're going to stamp their feet. Oil pierces the trend line on the way down while gold kisses 2,400. And what do we have at dinner tonight? We're going to have the farli con funghi e crema di formaggio. Sounds very good in Italian, but I'll tell you about it in just a moment. So the government reports that top line CPI, the consumer price index, came in at plus 0.3% month over month. That was down 1/10, right? It was plus 0.4% last month. And that's all you need to know. None of the other parts of the report which were unchanged, mattered at all. All they needed to see was just one little piece of data point that supports their narrative, that pointed to a weakening print. And guess what? They think they got it. The moment it hit the tape, futures shot higher, and then when the bell rang at 9:30, they continued to surge, apparently suggesting that investors and traders and algos have come to terms with sticky inflation that is taking new root in the economy. Think of the latest PPI report that we got on Tuesday, right? The sense is that while the Fed has made it clear that they're not in a rush to cut, yesterday's data may force them to change their minds. Now, I am not in that camp. I do not believe that's happening at all. I'm not sure if you do either. Investors who have been more cautious lately as they awaited this data point and the latest inflation data finally threw in the towel. They're hitting the buy button on their E-Trade account or their Robinhood account on the back of this news, right? Putting new money to work, sending stocks surging, and the S&P up and through into the next century. At the closing bell, we found that the Dow added 350 points or 0.9%. The S&P up 61 points or 1.2%. Now recall that I told you the options market was pricing in a 1% move in the S&P based on what the report said. If it was positive, it would be 1% up. If it was negative, it would be 1% down. So by now, I guess we know what that answer is, right? The Nasdaq added 230 points or 1.4%. The Russell added 24 points or 1.2%. The transport's up 18 points or 0.1%, while the equal-weighted S&P gained 54 points or 0.6%. Again, the Momo guys, think really the algos, causing all kinds of excitement, taking the S&P right up and through 5,300 at 1:38 p.m., only to pull back a little bit before surging again, ending the day at 5,308. The most recent rally that began in late April has taken stocks up 7%. The S&P up 7%. And if you go back to October, the October meltdown, the S&P is now up 30% off of those lows. Now, some of the move can be credited to the better than expected earnings season, right? The 80% plus beat rates, the upbeat forward guidance. Some of it can be credited to the ongoing idea that we're still going to get multiple rate cuts this year. And some of it can be credited to the idea that investors no longer believe that 2% inflation is an achievable target and that we better get used to inflation running at 3+%. Recall what I told you yesterday, right? Ahead of the CPI print, that Bloomberg was out there making sure that we knew that a 3.6% year-over-year inflation rate was the smallest year-over-year rise in 3 years. So rather than focus on the fact that prices continue to rise, they wanted you to focus on the idea that it's about as good as it gets, at least for now. And that there's nothing to worry about, that 3.6% is actually a good thing. Oh boy. But again, I'm not complaining about it. Why? Because I'm invested. So I am benefiting, right? The account was up better than 1% yesterday. Good for me. I didn't buy anything yesterday, nor did I sell anything yesterday. I just let it marinate. I want to see what happens today, what happens over the next couple of days as the market digests. The fear gauge, which is the VIX, it sank even lower, collapsing at 8:30 a.m. after the CPI report was published. It closed down on the day 7.25% to end the day at 12:45, a level not seen since December of 2023. And that is why stocks were so strong. Apparently, there is no fear. Nobody's worried about a thing. As a result, all the contra trades did what? Well, they collapsed. The VIXY down 4%, VIXY, the ETF, down 4%, the SPSX down 3.6%, the DOG down 0.9%, the SH down 1.2%, the PSQ down 1.5%. Interestingly, aerospace and defense also came under some selling pressure. The ITA was down 0.25%. The XAR was down 0.3%, which is a bit odd to me. It's not like the geopolitical risks are declining, because they are not. But both of these ETFs are trading at all-time highs. So I'm guessing that it's more profit-taking and reallocation of those profits, those assets, rather than a statement about the ongoing geopolitical risk. Peeling some off and taking some profits is never a bad idea, but under the current circumstances, I would not abandon that trade completely. Having some exposure here is not a bad idea. On the other hand, though, we saw strength across the board in everything else, right? Tech, once again, in the lead, right? Up 2.2%. Real estate up 1.7%. Healthcare up 1.5%. Utilities up 1.5%. Taking this usually boring sector up 14.5% year to date. So I guess it ain't so boring, is it, right? Financials up 0.75%. Industrials up 0.6%. Communications up 0.6%. Energy was up 0.25%. Basic materials up 0.1%. Consumer discretionary up 0.1%. And consumer staples up 0.1%. Now, down the chain, as you can imagine, it was more tech. More tech to create all the excitement. Semis up 2.8%. Disruptive tech up 1.5%. Expanded tech software up 2.5%. Expanded large tech up 2.3%. Cybersecurity up 1.5%. AI up 1.3%. And the growth trade, the SPYG, was up 1.6%. Home builders up 2.5%. The SPXL, which is the triple levered 3 times long S&P, would, as you imagine, was up 3 times the S&P to end the day up 3.62%. Even the value trade was up. The SPYV was up 0.7. And what happened to bonds? Well, they rallied as well. The TLT up 1.4%. The TLH plus 1.2%, while the Bloomberg Ag Index gained 0.7. Now, the swaps traders, the ones that are betting on cuts, are putting a September rate cut squarely in the bullseye. Recall that last week they were in the November-December camp. But after yesterday, they're becoming more emboldened, with some even teasing of a June rate cut. Now, the rise in prices is causing bond yields to plunge. The rise in bond price causing yields to plunge. The 2-year is now yielding 4.73. That's down from 4.81 just yesterday, and was down from 5.02% 2 weeks ago. The 10-year is yielding 4.33%, down from 4.42. Mortgage rates are coming in just a tiny bit, but for what? As rates come down, housing prices will climb. So it's a wash. Lower rates equals higher prices. It leaves you in the same spot, except that now you have to come up with more money for the down payment, right? 20% of a $7,000 house is $140 grand. 20% of an $800,000 house is $160 grand. The current 12-month CD rates have also come in a bit. They're now yielding about 5.3%, which is down from 5.5% the last couple of months. Again, you know how I feel. I think it's a bit premature, and I do not think that they're going to cut in September, just 6 weeks ahead of the election. Now, can they now pull off a June cut? Well, now that JoJo is floating the idea of a June debate with DJT, that would not surprise me at all, because it's all very orchestrated. But I'm still in the no-cut camp prior to the election. As naive as that may sound, I am still a believer that the Fed, in fact, is a nonpartisan, independent body, right? And they will act independently of what the White House wants, because the data still does not support a rate cut. I don't care what you say, doesn't do it. Just think about Tuesday's PPI report, right? It surged more than expected, and price hikes there take about 4 to 5 weeks to filter their way through the system and show up in the CPI. So I guess we need to wait until June 12th to see if those increases in costs are passed on to the consumer when we get the CPI report in June. Okay, oil was all over the place yesterday. In the early morning hours, it was trading at $78.60. By 10 o'clock, the IEA reported weakening demand. We saw oil plunge to a low of $76.70, piercing both the intermediate and long-term trend lines at $78. retesting the low from last week before actually regaining its composure to end the day at 78.87. This morning, oil's down just about 30 cents at 78.30 as it continues to try and hold on to that trend line at 78. Overnight, the EIA, which is a different agency, reported that U.S. crude oil, gasoline, and distillate inventories fell. And that suggests what? That demand is in fact strong. Contrary to what the IEA told us. So it's a game of cat and mouse. I continue to believe that demand is strong and only getting stronger. That being said, we remain in the $78 to $81 trading range for oil. Gold rallied and kissed 2,400. Another range that we've been talking about, right? As gold bugs digested the latest CPI data and are also now betting on a rate cut in September. The combination of the CPI and a slightly weaker retail sales report is fertile ground for precious metal traders. Retail sales were unexpectedly flat last month, right? Actually down just a tiny bit. Dow futures this morning were up, although now the market's open, so the market is coming under some pressure, not big, but just down a little bit. Like I said, I suspected that the Momo guys are going to test the all-time S&P highs, which they probably will today. They'll just test it to see resistance and see if they can push us up further. I don't think they're going to. The S&P is now in the 5,300 range, leaving it up 11.3% year to date. Just a hair behind the Nasdaq, which is up 11.5% year to date. The question is, where do we go from here? European markets are down, not big, but they're all down by about 0.2%. Investors there are focusing on the latest US CPI data and what that means for the Fed, and by default, what that means for the Bank of England. Eurozone CPI is due out tomorrow. The S&P closed at 53.08, up 62 points, and it appears that maybe we're going to take a breather after yesterday's rally that took us to these all-time highs. Investors are preparing to listen to what Philly Fed President Patty Harker, Cleveland Fed President Loretta Mester, and Atlanta Fed President Rafi Bostic have to say today, because they're all speaking today. Eco data today includes initial jobless claims and continuing claims. Housing starts expected to be up by a whopping 7.6%. I guess they came up at 5.7%. And if that's true, think about the demand for building products and accessories, right? Toilets, sinks, I mean, all that stuff. Building permits is expected to be up 0.9. Industrial production up 0.1, down from 0.5% last month, and capacity utilization remains at 78.4%. My sense is that we're going to need to digest the latest data and the latest move up in stocks. Again, this is why I keep telling you, talk to your advisor, create the long-term plan, execute it, and then stick to it. Do not try to pick tops and then bottoms. Your long-term account is not a day trading account. If you want to day trade, then open up a separate account and deposit some of your mad money in there and go for it, right? But do not mix up the two. A long-term investment account is exactly that, a long-term focused investment account. Call me to discuss. I'm always happy to discuss it, 212-381-6194. Okay, so what are we having for dinner tonight? This sounds so delicious when I say it to you in Italian. And what it is farfalle con funghi e crema di formaggio. So what that really means, it's farfalle pasta, the bow tie pasta, with mushrooms and cream cheese, right, is what that really translates to. Okay, it's a simple dish. Maybe it takes you a total of 45 minutes from start to finish, but it is something that you can whip up quick, throw it in the oven. The kids will love it. It will become a family favorite. So for this, you need a pound of farfalle, right, the bow tie pasta. You need sliced button mushrooms or white mushrooms. You need a sliced red onion, fresh spinach. You need 1 whole head of garlic. You need salt and pepper, a dash of oregano, a dash of thyme. You need 8 ounces of cream cheese, so like a block of Philly, olive oil, and of course you need to save a mug full of the tears of the gods, which is the pasta water after you cook the pasta. Okay, you want to start by preheating your oven to 375 degrees. Now, in a large Pyrex baking dish that's going to accommodate the pasta when you're done, you want to add the sliced mushrooms, add the sliced red onion, add the head of garlic. You've cut off the top, you've drizzled that with oil. You want to put in the seasonings, the salt and pepper, a little bit of thyme, a little bit of oregano, and then you're going to add the block of cream cheese and drizzle the whole thing with more olive oil. Cover it tightly, and now place it in the oven for 35 to 40 minutes. You just want to see it all nice and you want to see the mushrooms all nice and cooked and all the onions soft and all that. While this is happening, you're going to boil 1 pound of farfalle in a pot of salted water. When it's al dente, you're going to strain it and just set it aside, and you're going to reserve that mugful of the pasta water, otherwise known as the tears of the gods. When the mushrooms are done, remove and then take the garlic bulb and squeeze out all that sweet, delicious, fragrant garlic to release it and put it in the Pyrex dish. Add in the fresh spinach, which you have not cooked. It's just fresh raw spinach. Turn it with the mushrooms and mix it. Then toss in the pasta and mix it really well so that it all becomes coated with the cheese and the onions and the mushrooms and the spinach, right? That's it. You can then serve this immediately. And the greatest thing about this dish too, now that summer's here, is you can make this if you're having a summer barbecue or you're going to someone's house for a summer barbecue and you want to think of something to bring. This is one of those dishes where you can make like a big pan of it, a big Pyrex dish of it, and you can bring it. It goes a long way. It's always great on a summer barbecue table. You set it up there next to the steak or the burgers or the hot dogs or the lobsters, whatever. It's just another side dish, and it looks great in its presentation. In any event, look, it's a little bit cloudy today. It's hot and humid. It's a little bit steamy. So I wonder if that's suggestive of what's going to happen in the markets. But until tomorrow, take good care.